Wednesday night, and the dollar was crushed today, and we're getting in on the dollar again for a retest tonight. And the news just came out of Australia for some type of something, and I had a feeling we were going to keep going up on Australia to the 100 round handle. So I put up 50 pip grid, and I'm just grid trading. And somebody asked me if I was going to buy more when it went lower, and does this thing work? Well, okay, just like any trade, there's the risk to reward ratios. How much are we to risk? How much do we make? And another thing, do you have the patience for it to play out? Now, these retracement trades can be kind of scary in terms of you're catching a falling knife, and they say don't do this. But I'm doing it with some ratios of 2 to 1. Now, if the Canadian dollar drops for another 100 pips in the next 4 hours, I'm going to buy this whole plunge. I don't care about anything about the fact that if it's down 120 pips from here, I want in. So I placed a grid down in here that's way out in front of the market. I mean, this thing doesn't fill. Right now, it's actually long on one limit. Now, when it comes into this cluster here, below this wick, I'm expecting this is about 80 pips down. If we can fly down there, if we don't get down there, I'm coming in on top with buy stops. So this is a dual approach on 7 currencies, and there's only 2 possible trades here, a buy stop or a buy limit. There are no sell stops, no sell limits, no market orders either way. You're literally waiting for the market either to come to you. If it does not come to you within a specific amount of time, you can start putting in buy stops above. This is a bull-only system. Now, as the market's coming down and getting quiet, you're getting in on buy stops here if you're punching an order every hour that lasts for 15 minutes, say. If you get filled on that, hopefully there's a scalp built into that. Or you realize there's news coming out and you're like, uh-oh, that may just be the 50-yard line. Now, this is the big round handle where forget everything you know about Fibonacci. Fibonacci's never going to make you as much money as this would if you're a visual trader. I'm just saying it because I'm a visual trader. And for me, I cannot get my brain around all of this, what people consider to be, oh, well, you know, there's probably divergence. When we get to the round numbers, these markets are going to die out, or they're going to kick back into the round. Now, this New Zealand here, had you hand-placed orders on this puppy, or you just had kickbacks in here, 25 pip kickbacks, buy limits. Right now, I'm not going to put any because we could still come flying back into this fair value zone inside the... but I'm trying to restrict my trading to really wide. And the guy asked me, does it work? Well, I mean, it works in the sense that if you do not overload it like any other trading system. Now, the same thing with trend trading. Even though this is going up, and I could say it's going up, I could overtrade that to the point where I'm either buying at the market, I'm not waiting for each completion of each wave, and then all of a sudden there's this wicked 25 pip smack back here that just, totally destroys. In other words, you bought here, you're going up, they stop you out because you tightened your stop up, it's just a big... in other words, if you're getting in on stops, or the robot is, he gets a little chopped there. He makes money here, right? But now he's going to lose. He's going to start losing because he's going to take too many of these choppy, like, huh? What's going on? And, but the velocity of the sell-off is worth the fact that, okay, when you see a spike down like that, even before that news came out, like, you see them grab this top. Well, if we're not going up, then we're probably going to come down. So you're going to lay in orders that are, say, 10, 20, 40 with a master stop. Now, if you're going to trade like that, the master stop connected to these 3 buy limits, this one has to at least be better than break even. And this one has to be better than that. Maybe this is, 200%, this is 300%. Maybe you got a whole cluster in there, but as the market's tanking, you're always running disappearing order bank that lasts like 15 minutes if you're an active trader. And if you're trading 20 pips away on a half hour, right? So you have an hour, one order that lasts, say 30 pips deep. I got 15 pips deep, 10 pips here. So this is what this looks like. This is going to last 15 minutes. Right here, this is going to last, I guess I screwed that up. I guess you cannot put, dollar CAD doesn't let me, got a fixed pip broker here, so they're not letting me put it in. But when the market calms down, I can come in with a soft, with just a stop entry. Like here, I could have done a stop entry on this euro dollar just now. This is the 1 hour chart. As this is coming down, you're continually dropping a buy stop. This walk down here, and we come all the way back to the starting gate, the 50-yard line. Boom. You're out. You just made 20, 30 pips. And your buy limits weren't getting filled. So you fit to the market. So we're here right now. The buy limits are going to come in if you want to get in on a pullback. And maybe it's going to be a flashback. Like this is a drift back, but drift backs, you're going to have these trolling buy stops above running. But in the meantime, you still got, so you're scalped out of this thing. Now you're thinking, okay, time to get on the dollar train. Last place to leave the station is this, so you're going to lock in on top with buy stops now. Because it looks to me like, unless we plunge down more, this one, now this was the scalp. Just a minute ago, this is a 25 pip scalp on the dollar yen. Just placing tight orders that last for 15 minutes, because when this news comes out, all that's going to matter is how many pips. Like this thing should go down 200, 300 pips right now. It's probably going to race back some, just like this. The markets are very frisky, and especially New Zealand. New Zealand's a great limit order entry market, just like dollar CAD. Look at all these trades, and you can just be in and out, right? In and out. You just humping down. You're gone. Now this is probably going to go, this looks like this is going to go shearing up. So if I miss the train here, I'm going to think about buying on limits now on over here. And if I think this is too dense of a pack, I can move back some of these orders. And you can see the ratios I built in. Now these last about 8 hours. So these have been sitting here a while, but I can still move them without going for a full delete of everything on here. I'm in 7 pairs, so I can move this down to the 50-yard line and just bring all these back. I mean, yeah, no doubt. You can really get killed trading like this. Now, this is catch a falling knife, but this is the same thing that people make a living at when they're in the circus, right? I mean, the guy in the high wire act, he's paying the rent. So Forex is not for sissies, I suppose. Or maybe it is, right? Maybe it's for people that are going to back their orders off because it's too risky. But now these are going to last all night. Now, if we comes flying back for some reason into these, I guess those didn't last. They didn't last long. If they're about to expire, the broker's not going to let you move them. But that's a crop about 50 pips deep on the euro. Now, this big smash up to here in the Swiss was the buy. So instead of selling that, unless you're into selling that, I can't really get my brain around selling too much, but I love these plunges and then recovery. This is like the Elvis story here. And especially if you put a 25 pip grid up, you'll notice it bouncing off the 25 pip handles. So when you're on the 25-yard line, if you look at this as an aerial view of a football game, they run the ball back, right, to the 50. Now, the 25, when you get the 25-yard line, a lot of people, psychologically, you get the 50-yard line, both teams are nervous. You're like, oh, either way, right? Get to the 100, and there's the completion, right? And here it could be 200 pips. And here's 200 pips. All the fat ones are 100, all the skinny ones are 50 pips, and there you go, smash right to 100. Now, it's really, trading is just not, you can put all those things on it, moving average, blah, 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 channels, and, you name it. You can superimpose, you can totally project your belief system onto the market. That is totally possible. But in the end, it's sadly just it's just about price. And when you go to the store, it's just the price levels. And if those price levels are met, there's usually somebody that thinks that is a ridiculous price. And so in limit entry, you are trading ridiculous price. On stop entry, you're trading, okay, you know what, you calm down a little bit, I can almost, you know what, we could probably get married and we could have kids and everything, and everything's going to be fine. But, you know, come to find out, you're out of your mind. So that's always a big drawback. But not in the market. In the market it pays. So I'm committed to my 7 pairs, buy only. Now I could put a buy stop above this. I got a nice hammer right here. We just went sideways right at the 50-yard line on the dollar Swiss. But I think I'd rather buy the plunge on the euro. So if they crush the euro back into these, I'll pick these all up for a scalp up into this. And as long as my risk to reward ratios are correct here, I should be good. This is about 120 pips deep here. And I've got 2 orders there. So that's about, and now you just do the math on what you could afford there. Now, that's super deep, and if the market starts to really stampede towards your buy limits, do not, under any circumstances, add any more orders to that situation. You're already buying, and if you have a 250 pip deep single 1K out there, right, with a 50 pip stop or 100 pip stop, you think about this market crashing right now, 250 pips. Would you want to get filled at every 50 or 100 handle, and just figure out what that costs? When these markets go through these phases, it doesn't make any sense to try to make your indicators fit. In other words, for everything that makes sense is not a good thing in the market. The market's simply looking to get 50 cents away from, if this is a pip market, then everybody's worried about that. Oh boy, it's at the 50-yard line. Is it going to go to the 100-yard line? And when you can see them fail at the 50 and the 100, they go back. If they fail for 50, they may lose the ball for 150 pips the other direction. And that happens a lot. Here's a loss of the Bulls lost. They fumble and they bring it back 200 pips to here, and then another 50. And we fall under this floor. Well, we're in the 50 pip trap. We should just be putting in buy limits all day long that expire 25 to 50 pips to 75 pips deep. If you just start there in terms of my orders are just sitting in a grid. And if the market should plunge down in there at any point in time, now there's unemployment coming out tomorrow. So what if this market plunges into some crazy, and what if it doesn't? Well, you got 7 pairs, so you're only allowed to look for either a trend buy or a plunge buy. The trend buys are going to be buy stops, and the plunge buys are going to be buy limit orders. So you got 20 orders, you got 10 stops, you got 10 limits. Each have a separate price and each have a separate decay time. Now this platform's set up to go 15, 30 minutes, 1 hour, 2, 3, 4, 6, 8, and that's it. I'm not going to go to 12 because I think I can get to the platform in 8 hours. Now if I pass out from too many drugs or something, I'm gonna get up and make some coffee and launch some 4-hour orders that are like 40 pips deep, 4 hours. So that's like at a rate of 10 pips per hour, like 40 pips in 4 hours. Can the market drop 40 pips in 4 hours? And if it does, when you buy down there, do you want like a 20 pip stop or do you want a 10 pip stop? And that one hotkey could be dedicated to just one order. Because as the market starts to tumble and you punch the same key, it's actually going to be at a different price anyways. Same ratio on the stop though. So as long as you run your stop ratios in alignment with what you consider to be, you know, if it put 20 pips stop to make 60 pips, Yeah, you can do that in Forex. 25 pips stop to make 50 pips, sure. 25 to make 40. All right, but you're gonna, it's not. And then break evens. I know people do trade break evens. I used to trade worse than break even, and the problem is that unless you really know your market, when it's plunging like crazy, maybe you could have break evens in there. Like you're like, oh, this is just. And you cannot press the button very often on those. Running a 15 pip stop with a 25 pip or a 20 pip winner is still better. Because if you lose, you're still losing money. It always waiting, and if you're on a smaller fractal frame, if I went to the 5-minute right now, there may be a buy on a stop and a tighter limit, but I'd say almost you have to be very. You can't trade a lot. Especially if you've got these psycho plunge orders sitting out here. It's not a good idea. Really, overtrading is not a good idea in general. But I try to make it a little more fun to trade that pattern that we've all seen a million times where the market plunges and then it retraces. And I guess bounce, the word bounce just appeals more to a buy limit situation for me. And if something goes on sale, I'm getting in, right? So I'm just like shopping for the cheapest currency. If it's 200 pip discount, and if there's a sale that lasts 1 hour, 200 pip discount, who's not bum rushing that place? And having a big scalp grid down there to capture it, and make sure that is always sitting below the water table there when the market plunges, and we get these ridiculous retests. I mean, retests that happen so quickly, people just can't believe it. Now this trade's over. If you went long here on the 50-yard line, you're out, right? You just made 50 pips. If this thing, and that trade's done, and then it's just, I could put another order in there now. So if I wanted to get in on this next pullback, I have to come in at least on the 50-yard line. I think it's about right here. So just below that 50, I'm going to put a couple in. I think I duplicated an order there. Okay, that probably is. Now, I'm trying to space these out so that I don't get any duplication, but I did put a lot down here. Now, these are the 8-hour guys. If these start to stack up, I can pull these back. But you're always trading behind the lines, so to speak. Outside, you're going to trade in unfair values. Are you going to be your entries here? So you're going to get at the 50-yard line here. And if you tug them back and keep the ratios the same, you're just basically creating a trap back here. And some of these you can place right at the actual price. Right here where we ricochet off. So you can actually have a hotkey that launches a ratio, and once you get it on the screen, then you can drag it around. So you could just say, okay, well, give me that ratio here, and then find the ticket, and all these tickets, and you move it, and you say, okay, well, I'm going to buy more down here. And the key here is not to buy until it drops at least 100 to 150 pips. If you're trying to make a 75 pip bounce, maybe it drops 50 pips. And you could also have it so that you're getting in, these are bigger orders, right? The guy asked me, bigger orders? Yeah, sure. Maybe you're buying, but how about instead of bigger orders, just put more orders down here in a band. So create a scalp band. In other words, it buys here, it buys, say, 4K, and then the exits look like this. So you have a little baby, so here's your little trap. Market comes down. It snares these, and then it starts taking off. It's pre-done scaling in each little you know, each little thing. And if you still have, you're just trading, you know, 50 pips, so you don't get filled till, I mean, in other words, if you're looking for the actual 50-yard line, here you get the 50. I mean, this actual 100-yard line here. So 100-yard lines, we don't spend too much time there. Always come back to the 50. Always a chance for a bounce off the 50. Here, bounce off the 50 just was like so fast. But the market is just getting there and getting back. It doesn't really, it's not trying to respect anything. It's not respecting Fibonacci. It's not respecting moving averages. Not respecting MACD. There's no respect. The market has a lot of traits that are very sociopathic. There's no respect for anything. It's terrible. And so keep that in mind. And just the fact that, and if you're a seller and you have a sell limit that starts at 50, 100 to 150 with a 150 pip hard stop, and this one's gonna get out here at break even maybe, and this one gets out for bigger money, and this one gets out for the whole thing, right? Because we finally, I mean, you could, you know, if you wanted to be one of the, say, oh look, finally made it back there, luck never stopped me out. See, my original stop was up here. So yeah, you wrote out this whole drama. It's really how tight you're going to get in, and you know, the disappointment increases if you try to run a buy stop here and you get chopped and chopped and chopped, and you know, well, how about you just you're selling stops here and you have buy stops here, and you just don't run them too tight. You could fill passively here to the downside, or you've got buy limits sitting at 25, 50, 75 pips deep. But if you break this into quarters, this is the 25-yard line. Here's the 25-yard line. Yeah, sorry, this is, yeah, 50, 25 going to the end, 0-yard line, I suppose, football, right? I don't know anything about football, but I'm assuming they don't call this the 100-yard line. Maybe they do. I thought it was 0. It was like 50. It starts to go negative. I don't know. I have to take a look at that. But this is how they do it. They want this price, and they want to make 100 pips. And they love that 100 pip stuff. So just notice 25, 150 pips, and sure, you broke that trend line. And but just before you broke it, you just got in like a cloud hammer here. 50 pips up on that trade already. Yeah, you can get in here with a stop down here, I suppose, to make 50. There's your break even or trade. And you could get in on stops there, I suppose, as you're breaking that fractal. You know, you just get picked up in that. It's filling this hole, you know, I suppose, right? You're filling this little hole here. But look at this 50 spiker. It's just, you know, yeah. You know, if you have an order that's sitting there, maybe you got a grid that's sitting there all the time on the 25s. Just for those situations, you've always got a grid on all the currencies just sitting there waiting. But I'm trading 7 because these are the majors, and this is how it is. And I ran it vertically. I could run it in a tile mode, and if I did that, then it looks like I have to overpay for this now. CAD is the last thing to leave the station here. So I'm going to buy these plunges on the, it looks like they're going to rip back this and retest it. So I got all my buy limits sitting here for the retest. And here I'm running, if I tile this out, it's going to look like this. It looks kind of odd, and I fixed the scale on here. So let me just unfix the scale on this. And now this, because vertically trading like that, you know, first time I did it, MT5 let you do it, but not MT4. And all you could do in MT4 was run this. Here, I'll just reload the template. You know, running this system like this, buy only, just too easy to think about buying something. Kind of odd to think about selling something I don't have, I guess. Now, this is going to be 4 European currencies on the left leading, and the dollar's on the right. So it's pretty split, not a perfect world, but 3 against 4, not 4 against 4. I wish it was that way, but it's not. What are you gonna do? Okay, we zoom in one level here to get everything. So what's the cheapest thing to buy right now? I'd say the CAD, if it takes out this 50 pip and if it goes down another 200. This one looks like it could still kick back, and this one could kick back too. So I'll buy these on, say, if it comes back. But at this point, I kind of want to zoom in and see where my orders are going to go. But if I know this is 50 pips on this one button, okay, so this is about as tight as I want to get. And so as time marches on, and you can see the almost an attempt at the 50-yard line there, or the 100 pips. Actually, my 100 pips should be a thicker line. Yeah, so right here's 100 pips. And look at this smash off the 100 here. So they got that number if you had a pending there for a scalp, or you bought the kickback here. And on the 5-minute, you can just see how stupid that trade is. You actually got 2 chances to sell at the 50, at that 50 number. So yeah, that's 50 pips. I didn't put the 100 up here yet, so it's just 50. So it's 50 pips all day long there, and it doesn't really so much matter. Now, if you get this thing to come ripping back here, I definitely want to get in. And I'd say if you put all your orders 100 pips deep in a bank down here, as long as you don't put any orders at the same price, and ideally you want to place them by hand on these peaks and valleys. That's really the way to do it. But if you've got enough money in the account and you really want to get more aggressive, okay, now this, I would buy this if it pulled back, say, 40 pips in 4 hours, and maybe here. But now I really think I want to buy this. So this is off to the races, and I'm going to get in just below the 50-yard line, super aggressive. I'm going to go to the CAD and get in much deeper, because I think this is, it looks like it's hell-bent. If you go to the 4 hour, you can see this thing coming back about 200 pips. So I'll think about getting in right at this insane low here again. So that's why I fixed the scale, is because I'm only concerned with the 150 pips plunges. So right here is 150 pips. That's about 125 pips. And that's a lot of money. 125 pips, and I could back these up. So the jobs report's coming out tomorrow. We could actually come down here. Anything's possible. And I think as long as you keep that in mind, this here is a each vertical dotted line this is Sunday night. So even if you opened up the week here and you had an order to get in, say, 50 pips deep out of the gate, you know, you got in there with, say, a stop back here. Now, if you hand place your order at this triangle, the buy limit right there, and again, it becomes another ricochet, but it, the sellers come in on the last known bottom here, then they rip it down. But you can see it coming, and if you're not there to pull the trigger, you just have a massive bank of orders down there to pick up that wick. This is 50 pips here. If you're buying here with a 50 pip stop, you just, you know, break even. Now, ideally, you're buying this with a 25 pip stop to make 50 pips. Always thinking in terms of how many orders you got in there, how long they last, and can you take advantage of this stupidity? Like this 50 pip wick. Almost to the 50-yard line, not quite. Damn close. Okay, so I'm thinking this is going to come flying back now. So I'm going to go back to vertical mode. Zoom out. And I can see a triple bottom here in the pound. So the pound looks like, pound's always choppy. A great limit order trading thing. And look at this puppy. Looks hell-bent on a plunge. So we're letting this same thing here with the Swiss franc. Looks hell-bent on a replunge. Looks like the yen could come all the way back. So everything tonight is buy limits. And so if these guys go down, these guys go up, and none of these buy limits fill. Because pretty much, unless something really weird happens, these four on the left are against the dollar, and these are pro dollar. And on the you gotta make them all 1 hour charts though. And my zoom level is right here. So these need to be all set to 1 hour. And so the fractal, we're looking for peaks and valleys in the 1 hour. And we're looking to risk 50 pips. Let me just save this template. Apparently I didn't put that handle in there. But that's my system, is buy low, sell high. And it's my favorite trade. So I guess I can see an invasion of the supports here if we come ripping back. And this dollar CAD, I still want to get on the long train. So right now I'm going to I want to put a buy stop in for a scalp, and I don't know if you can see the take profit on that. It seems like the only thing left to buy. So if you can see that take profit stacking up, let me zoom in if you can see it. Now these are the trend trades. This is buy stop entry, which is almost at the market. I think my stop starts at 4 pips above. So as we approach this moment of truth window, now I want to get in super deep. So if we come flying back down here, I want to get in 120 pip deep down here. I'm giving it 8 hours to drop 120 pips. If not, as they walk it down here, and I could go to if I wanted to really just trade the CAD tonight, which I guess is what I'm doing, is I really am anticipating just how this currency is. It just has that in it, that it likes to crush and take out. And if it gets there, if I see it's screaming too quickly there, I could back up a couple of these guys. I can always pull these back. I just have three orders in here. Now that you pulled these back, you got to pull these back. Come all the way back into this top back here. Just never put the orders on the same prices, or you really destroy the point of trading, of scaling in and out of markets. But you need to get it on there And make sure it's really far away, so if they do stop you out, you go into free fall. You're not in any trades. You get picked up on the next order bank. Always got to think in terms of worst case scenarios. And when you're buying this, these dips, and just sheerly the fact that you're on the 50 pips, the market just moved 50 pips. So you really don't want to overthink it. And I put the hundreds in there just so I can see why 50 pips is different than 100. The behavior at the 100 handle is more dramatic, I think, than it is at the, looks like we're going to slice back through it here. So sell limits up here for sure. And if you go on the 4 hour, you'll see why that's a big deal. This big zone here, this big 50 pip scalp window. Selling here and dumping here with maybe your stops are 25 pips. Or they're all the way to here, 50 pip stops. But look at this. This is a real historical 50 pip smash and grab. Yeah, sure, it works. You just got to really be just like any other system. Can't overtrade it. You have to let it happen. These retracements are just amazing, especially if you keep the ratio. Some of these are for 20 pip stop, 60 pip winning. When you're starting to buy 120 pips deep, your exit needs to be way above you. And if you're to maximize the money, I had to go to 7 pairs because since I'm not selling, I need to have something to buy. I buy whatever's on sale. Now, like I said, I could have put a buy stop here on this hammer, but I thought, well, if Canadian goes on sale and it looks like it could go down about 200 pips tonight, I will buy that as it's plunging. But right now, I want to get in on top of it with scalps to the back to the round handle, possibly, in case the New Zealanders and the Australianers are done ripping it to the 100, and this just stalls out here. And if the Swiss, instead of chasing the Swiss on the long side here, the Swiss has already left the station, in my opinion, 50 pips, looks like it's hell-bent. On this round handle, I'll buy the euro as it plunges. This should come plunging back as the dollar Swiss goes up. Typically, that's how it rolls. Not a mirror image, but and I'm only concerned with not even looking back. And this is another kind of, I guess you could say, another fallacy or another doesn't matter. A lot of things in trading don't matter, and I think the you can in other words, if it's just about price, then sure, I could superimpose my belief systems on top of the market, but say you're looking left because you think, oh well, look at this is back from one there, or you have some pivot system, right, you're using, and look at this pivot system I've got. It's wonderful. But the question will always be on the pivots, what do I do with them and how big do I go in? And but if I walk away from this platform right now, everything should delete its, the last order should only last 8 hours. So if I fall asleep, Europe's going to open here in about under 6 hours. So I know some of these are going to be sitting there left over. If it looks really hairy on the opening and you see your limits, you have to have some gauge of if the market just plunged 250 pips in 40 seconds, maybe you got to pull away even the orders that are 1,000 pips deep. I mean, it's always going to be a consideration. And but what if those orders have tight stops and you've got enough money for them, right? And if you know every time you press a button what it costs you, say it's $1 a button push, so you got a 10 pip stop on every order. It's a micro account. If it's $5 a button, every time you hit the button, it's going to be $5 on a micro, 50 pip stop. At that point, you're swing trading it. Market's plunging like just crazy, right? It just went down 100 pips, and you're putting in 100 pips deep, 150 pips deep. Everything's got a 50 pip stop. You're like, whoa, and you're capturing these things, right? Some are just some have a 25 pip stop, some have a 50, some have a 75. The one with 75 pip stop, maybe it's a 150 pip winner. Maybe it's a 100 pip winner. So getting all that set and knowing which order is going in, like you kind of have an idea. And if you need to go chart by chart, you could do that. If you fix the scale on all of these, and you're only looking to make 50 pips, so your world's just going to look like this. It's not going to really matter about anything else. MACD, none of that matters. And this is all the MACD is a like an echo chamber of the market, or whatever your moving averages is nothing but like a compressor. Like if you had a audio compressor, I have to put another scalp in here. If you had an audio compressor running and you were looking at the wavelength come back, it's all scrunched down, and when the volatility explodes and it goes off into these ranges, and that's it, and it comes back, or it keeps going. And now if it keeps going, if I had a buy stop right here and I'm going to hedge this thing because I'm thinking, you know what, maybe this is going up. It looks like it is, actually. So it looks like now, if I don't want to chase this to the upside and I miss that train, I'm thinking buy limits on CAD. Maybe CAD's consolidating here, and so, but I'm not, since I can't sell this, at least it takes my decision down to just, you're either buying 3 or you're buying 4. You're looking for the buy on the left 4, or you're looking for buys on the right 3. And if you wait for the next beat, like if you missed, without chasing it, and you really want to have the best setup, right? You want the best setup for each script that makes sense. You have 10 buy stops, and you have 10 buy limits. Each are different prices and expiration times. All right, so tonight I may have to make some coffee now that I'm running this, and just if I pass out, I'm going to drop orders that last at least 4 hours, in case the market should make some ballistic move, counter move. We're waiting for the jobs report, and so CAD may have to come all the way back down here and come up. So I would put in, say, some 6-hour orders down here, and here I'm going to put in some more super deep. Got about 2 hours to go, so I'm going to put in the 3-hour orders. So Europe's about to open, and looks like the Swiss could get slammed too again. I'm at least 100 pips from getting filled on this, New Zealand, should there be a smash back. And it looks like the euro could even come flying back. So the guy that sold the 25 handle, he made at least 25 to 30. And you could put 10 pip grids out there, but I would say if you're going to do a 10 pip grid, make sure it lasts for, say, 15 minutes, half hour, because That way you're not going to get caught. Like, you don't want to get in on every price handle for an 8-hour order, because if this thing comes down, they're just going to crush you. They're going to destroy you. You don't want that to happen. And this thing, if you can imagine the euro coming down 150 pips and then going up 100 pips, or going down 200 pips and up 100 retrace, but you're going to buy down here 200 pips deep, that's a good trade. You know, that's a fantastic way to go. The let's see now. Okay, so, and you can also do the full screen, but all my buy limits are way past where they're going to overshoot the runway. That's where I want to get in. Anytime I see them overshoot, that's my entry. Now, see, here's 20 pip handles, and this is the 50-yard line here. So if you want to trade with a 20 pip, stop. And you're looking at the market in terms of, you know, that's a 20 pip window there. I could have had a sell limit up there, and maybe that's going to be your 15-minute platform. This is another way to go. Put in 20 pip grids with the this is the 50-yard line. I think I must have changed the size of that. And so there's 20 pips, 50. It's more lines to look at, but you can see the 20 pip sell limit guys are already out. They had a 10 pip stop or whatever, and they're already out. This does look like it's going to plunge, though, doesn't it? And so this is kind of my psycho retrace of the night, if it does happen. The other possibility is same thing happens here on the yen. If you go to the daily, if you go to the 4-hour, you can see a possible retest down here. So these are my sleeper cells, and oh, looks like well, I'll definitely risk one more. Now this is going to be my bigger profit order. If it took it there, I guess it went in there. Try to make 25 pips there. So this is kind of risky narrow, and if it plunges all the way down to, just need to back these orders up. These look like they're just too close in price. And if it ever starts to look like you can see duplication here, you need to get that back there. I'm already in pretty heavy, but these are the stops. These are almost like the market orders. So once I get stopped out of this thing, it should go into free fall here. It'll fill this giant bank, but I'm looking for at least the 25, and if I can get to go to this 50, that'd be great. And if this smacks back 100 or 150 down here, and these things are like dominoes going off, you know, bam, bam, bam. But look at this beautiful plunge back here. And if you had a hand-placed order right here on this top, I don't think you get filled on this one. So if you had a buy limit sitting right here, you would have got filled. Here on this one, you wouldn't. But you could just have a blind order in there, because you want to, maybe you bought here and you bought here and bought here, right? You bought that whole thing, and you have like 2 or 3 orders in that one script. Here's a nice situation. Buy stops are running, and you got a buy limit capture of 50 pips. They're all biased to the upside. There's a scalp and a smash. Here, if the robot was to try to get involved in a trend trade here, But volatility breakout works till the volatility comes back in, then the game's over. So right is after the spike, you just go into buy limit mode. You're all in limit orders. Every time you see a climax, you're just thinking, okay, well, buy limits now. Buy stop here. Maybe that's kind of scary. I'm thinking right here, I want to put a buy limit in every 50 pips. Especially when I see this first plunge to here, I'm like, oh my God, let me buy. Now, there's a stop here, and you could have a hand placed order to buy that, that stop hunt. Nice, you know, almost 200 pips there. 150 pip, but look at these spectacular moves. See, here's all that, all your 50 pip and 25 pip winners are all cleaning up here. All this drama, always making money. Not good for stop entry here. There's a couple times it calmed down though. Like here's a quiet little triangle. And that one, that's it. Okay, so back to the Canadian. Is it going to plunge tonight? I don't know. It's pretty iffy. And this looks like it's running out of gas. The euro pulled back to the... now it looks like it could take a dump. Come back in here, get in my limits. And get these plunge orders going. Now these plunge orders are evaporating here, so I don't have anything that's close to the market. These are all the mind-blowing retest zones. And yeah, this is, I just love this style of trading because I just don't care. I can't care. I am aware of the fact that, you know, this is probably like the sellers came in at this 50. If you were a hand placed order here at this double top, you're so short this right now thinking, you know what, it does look like it's just gonna go like completely nuts down here, but then it's gonna fill that pack. And if I put more orders in down here, certainly we're gonna just clean up like this is what we had last night. Same stuff last night in this New Zealand dollar. So last night was a big if you traded this thing last night, New Zealand dollar gets crushed right here. Look at this. And then we're getting the retrace off the 50, the big round handle here tonight again. You got a buy limit here. You're up almost 50 pips on this trade right now. Right. I mean, this really shouldn't be that hard to figure out. Buy limits are there. You even got filled here for not quite the 50, but always the retag, and then here's the buy stop stacking up. Here's a classic scalp back to this. Double bottom. Your limit orders, if you wait till they retrace, you know, wait for the retrace, and if some of those are big bankers, you know, you're always going to make just piles of dough on that strategy. But yeah, the NFP was it happened very quickly, and it happened like this, and this was like your 15-minute chart that day. That's another thing. Like here, look at this 15-minute smash, and then finally retraces. This is when the yuan was, for some reason, this currency, this is like not a news event, something here, it's like 20 after 8 or 20 after, all of a sudden, bam. And this was making historical low there. And if you had buy stops here for the drift up, you got picked up in the stream. But if you had that crazy 75, 50 pip deeper with some scalps built in, the whole retrace here was amazing. Okay, always looking for the plunge. New Zealand looks like it's gonna go up there, but yeah, I guess I'm a Canadian dollar trader tonight just because it seems to be the easiest for this buy limit setup right now. But there could be a big one last blast on the dollar, and certainly the dollar's been a little bit ridiculous. Here comes the Australian looking for a big plunge here now. Look how it's gearing up for a. It's kind of, well, looks, it's a 15-minute chart, so that's a little kind of cheating there. Not cheating, but when you see the market gearing up for that move, you know, man, doesn't that just look like, wow, we're just going to go down. But look at this, 50 pip nonsense. All right, well, that's how I'm doing it. That's the magic of grid trading. And gosh, I want this Canadian to go up. It's stuck in the middle of it's stuck down here. Looks like it could go up here maybe one last time. But look at this double bottom here. I mean, look at how easy off the round handle. Now that's one thing the CAD 100 pip world. A real grid trader's dream, this damn CAD. Look at it, right to the 100, back to the 100. Okay. So I just have to wait. That's all this is. Waiting for the fills here on these limits.